Good day, everybody. Listen, I'm doing this because I literally just woke up half an hour ago. This is 6 a.m. right now in Vilnius. Traveling to Thailand today later at like 1 o'clock, but I really wanted to make this happen before I go, just so you guys would see a little bit deeper into what we are doing here and to kind of answer two questions that I would ask myself if I was watching myself stream for the last 2 to 3 weeks. One is, why do I take so many entries? And why do I trust it? And how do I keep my 70% win rate, right? So, literally, this is how I read the market and how I see the market setting up from day to day, from session to session, basically 24/7, 5 days a week. And this is how I would explain myself, right? So, there's few concepts I want to go through that have to be understood and have to be learned before we enter a trade. And only then we go into the real ICT strategies and all those 13 model, 13 entry strategies and partial stake profits, yada yada. But without the high probability setup panning out itself, I don't enter a trade. And what do I call a high probability setup? So there's 5 key points to that I'll always look for, which is drawn liquidity, power of 3, Judas swing, kill zone, and the model itself, right? So what I'd like to do is I'd like to go through one by one today, through all those, say 4, 5, basically, because fifth is the model itself. So fifth we won't cover here. But first 4 things for a high probability setup to appear, and without which I usually or very, very rarely enter a trade, right? So high probability setup, I usually coincided out of 5 things, right? This will be nasty. But imagine there's 4, 5 pieces to this pie, right? One of them, it has to be the draw on liquidity itself, meaning where the price is moving. And I want to know that, right? This can be daily bias, this can be sell stops, or anything like that. Second is power of 3. If I don't see any power of 3, I'm not entering a trade either. Judas swing right here. If we are in a good kill zone and the model itself, right? So I need these 5 things to pan out to have a 100% high probability setup for myself. And I always say I distribute my setups into 5 places. So if, for example, if I'm missing the Judas swing, right, my probability to win the setup is 80% only, right away. This is how I work with the market, and this is why I take so many entries, because every time I see something panning out that is 100%, take that entry. Because then I know that my win rate at 100% is about 70.5% actually this year so far. And I know that 70% of the time, if I take the high probability setup, I'm gonna win. But if I take that 80% of the time, you can do the math. You're probably gonna be better than me. But from 70%, there's only an 80% chance of winning. So for example, if I only have 2 out of 5, or let's say the model is the least important, I usually don't give it full 20%. So if I have only a clear draw on liquidity and power of 3, that is only 50% high probability in terms of what I know about the market, right? So if I have a 70% win rate myself, and I take a half high probability trade, I'm only gonna win 35% of those trades on paper, right? So just to dig a little bit deeper, let's talk about how the market moves and how I see those high probability setups, right? So market sell moves because of 3 things and into 3 directions. First is towards liquidity. So this is very simple to explain. If you see double tops, double bottoms, equal lows, equal highs, this is one of the places where the market is drawing to. So we usually call it buy side or sell side. And this is what market is attacking, and this is what we want to see. We want to see movement there. Second thing that market moves towards to is equilibrium. So I always use Fibonacci's, and with equilibrium I always look for if the market is moving, I'm usually looking for premium or discount, right? So if the market is in the premium, trading somewhere right here, you'll always push to the equilibrium to find fair value. Basically, if the market is trading in the discount, it's going to move towards equilibrium at some point to find that fair value as well. So this is second time when, or second second reason why the market moves itself. And third one is to find fair value itself. So fair value itself is the dictionary that I see. Those are fair value gaps, those are volume imbalances, those are breaker blocks, order blocks, and so on and so forth. So, but otherwise, just think about this as you would be a painter. So very simply, if let's say you have a paintbrush, right, and then you're playing around with a paintbrush, if you skip somewhere, you're always gonna have to come back to it and to paint it, right? And I literally just drew a fair value gap for you guys. So consider the market move towards sell side, buy side. In other terms, liquidity, buy side, sell side. It consider it to move towards fair value gaps, or consider it to move towards equilibrium, which we have here as well, premium and discount. Okay. Second thing that I want to see happening in the market after I see a clean and clear drawn liquidity is power of 3. So every candle that opens up, it wicks, it pushes to one way or another. Let's say this is a bullish candle, and closes. So every candle, whether it is 1 minute chart, weekly chart, daily chart, any other chart, it moves with power of 3 in mind. So let's say this is a weekly chart, right? So initially in the weekly chart, we're gonna accumulate. This is power of 3 in, as a dictionary says of IC. We're gonna accumulate, we're gonna manipulate, and we're gonna distribute. So distribution is the part where you wanna participate. One more time. Accumulate, manipulate, distribute. So distribution is the part where you want to participate. Very simple. And whether you're looking at a weekly candle, daily candle, 4-hour candle, whatever candle, I always want to participate in distribution phase. This is where kind of kill zones come into place as well. And I'm going to talk about it a bit later, but think about what we do throughout the day. Morning hours, Asian session, we want to wait it out, because what Asia usually does, not always, usually, consolidates, accumulates the market. What do we usually see London do? London usually we see take that sell side out, right? What does New York do when we try to trade? Because we say that it's always the highest probability, because we have the most clean expansion and distribution itself right here, right? Usually London will attack a buy side. My bad. Usually New York will attack a buy side liquidity pool resting above the market. So if, one more time, right? If Asia consolidated, it created sell side liquidity pool. We're always happy to have a power of 3 happening with London, taking out that liquidity, pushing away from it, maybe creating a fair value gap, and then expanding, or in other words, in terms of power 3 dictionary, distributing. This is where you want to find your setups. This is why I say that I only trade New York and EM sessions, because 80% of the market movements are here. And on this one, on the second part, very, very honestly with you guys, if you don't understand what I just showed you, in my opinion, you should be opening any trades. And if you feel like opening any trades, go and understand this. How can you understand this? Just look at the market. I'm not... Okay, I am gonna open my... Nope. Where are... No, I won't open my charts, but I'm gonna literally say that every single candle pans out like that. If you don't believe that, just go take a look at 100 candles. 8 candles are gonna be looking exactly like that. And power of 3 happens throughout the printing of that candle, whether it is weekly, daily, hourly, doesn't matter. Third, we want to see a Judas swing. So Judas swing is something that we look for right before the entry. We want to see a fake out move to take majority of retail away from the market. So on a weekly candle, Judas swing is the manipulation move of power of 3 right here. On a more zoomed in, let's say 5-minute candle, what I love to see is, for example, 1 hour liquidity resting below the market. So 1 hour sell side resting below. For example, that 5-minute chart to take away 1 hour liquidity, which we would call external liquidity. Internal liquidity would be lows in 5-minute chart. External liquidity is lows on 1 hour chart because it's a higher time frame, right? So for example, 5-minute chart taking lows from higher time frame chart is a Judas swing. And Judas swing we call, basically in our language, in English, let's say, we call a fake out, a move that fakes everybody away from the market. Usually it happens during the news itself. That's why I usually don't trade the news and I just let the market rip. After that rip happens, we usually trace back because that initial move and manipulation itself is just a Judas swing. So I'm always waiting for a Judas swing, or in other words, for a fake out to appear. And this is the third, third thing that I look for before I consider a trade hike probability. And then I look for, I'll draw this like this again. Like that. I look for a kill zone. So Asian kill zone is majority of times, I will say, is about 75 and 80% above in terms of percentages. Majority of time Asia will consolidate, so we're not touching it. Asia is, I won't give you the hours because I probably don't even remember by heart, because I just, when I sit in front of the charts, I just remember it by heart. But let me try to find my notes real quick and see if I can give you the number of when is the actual Asian session. This will look dumb, but Asian session is so good. Asian session is 7 p.m. to midnight New York time. So Asian session, we mark it. We want to find sell side, buy side resting throughout Asian session, and we consider it a time of day that we don't trade. London itself, which is 2 a.m. to 5 a.m. New York time, we don't trade either because we want that daily Judas swing to appear. So if we know that the bias is bullish, because on daily chart we have buy side resting right here, we want Asian session to consolidate and London to give a Judas swing, a fake out. So during 7 a.m. to 9 a.m., let me write this, London, which is New York session here. We want after that Judas swing to find this expansion. That expansion happens 80% of the time during New York session. If you don't trust me, just go through your charts and take a look. We want to trade this 7 a.m. to 9 a.m. Then we want the market to consolidate and accumulate one more time to find a move that happens. So this was forex mainly, right? Those three things that I just showed you was forex mainly. But then what we want to see, if we trade indices, we want to see a very similar price action in terms of manipulation and yada yada, right? So we want the market to accumulate during morning. And morning I call very early hours, 2 a.m., 5 a.m., and so on and so forth. We want market open, which is 9 to 10, that we don't trade to do the Judah swing. And we want the majority of the move to happen during AM session. AM session is 10 a.m. to noon. We don't trade before, we don't trade after. We want consolidation and some liquidity to be taken during lunch hours, and then you want to take the rest of the daily candle during PM session. PM session is 2 p.m. to 4 p.m. as well, New York time. And now you just kind of understood when you're gonna see me at the chart. You're gonna see me at the chart during London to take a look how the Judah swing pans out. You're gonna find me during New York to trade some Euro USD, GBP USD, or any forex pair. You're gonna find me from 9 a.m. to 10 a.m. New York time streaming the opening range, so I can see that Judah swing happening. And you're gonna see me usually from 10 a.m. till noon taking a trade on indices, because this is the most high probability kill zone to trade with. Sometimes I will trade PM session, which is 2 p.m. To 4 p.m. But usually I'm at the charts for 12 hours already, and I'm not too keen of taking any positions. And knowing this, 80% of a very high probability setup for ICT, which let's just summarize. We went through with just draw on liquidity. We went through power of 3, PO3. We went through Judah swing. I'm going to Thailand. This sounds Asian. This is gonna be fun. And we went through why I kill zones, because this is massive as well in terms of knowing when stuff will appear, so you don't waste your time at 11 p.m. and 2 in the morning or whatever. You just come to trade during a certain time, which is the most highest probability to have a proper setup for you. And then only the fifth thing is the actual model. So when I start with my students that we started last year, 2 years ago, and I'm starting hopefully with more people this year in terms of very active learning, model is the least important thing that you want to know. And model, you can come up with a model like that if you want to. You can say whatever bullshit you want. You can say that you're going to use indicators. You're not going to use indicators. You can use Haikinashi if you want for the entry itself. But if you can't find 80% of the high probability setup before you take the trade, which includes that model, there's no need to learn any model. So basically, just so you would guys understand me better, learn those 4 things, understand those 4 things. If there's questions to be asked, please feel free to ask. I'm gonna help. The guys in Discord are gonna help, and so on. Leave a subscribe, like to this video, to this channel. I would highly appreciate it, and see you next time.